either cash or on credit. Now keep in mind your contra accounts are extremely important, especially when you do your asset disposal account. So for cash, we'll have a bank as a contra account. We'll have debtors control when it is on credit. But we can also trade in our fixed asset, and for that the contra account would be your creditors control. The other option is to take it for personal use, and by now we all know personal use means that we have drawings involved. It is also important that you know the definition of a fixed asset. So fixed asset, also known as a tangible asset, is intended for generating income and not for resale purposes. And that is important. We also have the different types of fixed assets, which is our land and buildings, equipment, and our vehicles. These assets, important that you need to know how to calculate the book value or your carrying value, and that is determined by taking your cost price minus accumulated depreciation, and that is information that is needed for your balance sheet. What is depreciation? Here we need to take into account that we have used our fixed assets and it will lose some of its value due to wear and tear, with the exception of land and buildings, of course. The useful life of the asset is considered in order to determine for how much it can be sold. In other words, the replacement value. And again, we need to take into account that an asset can be fully depreciated. That is when we say the asset has reached its useful life. And for that reason, it must be retained at a carrying value of 1. And I'm sure that you're all familiar with this. When it has reached the end of its useful life. How do I find that? I then take the last depreciation amount that was written off, and the carrying value is determined minus the 1 rand. So what is it that you need to know as a grade 12 learner? How to calculate depreciation using the percentage on the cost price. And I think that is self-explanatory. Also, the percentage on the carrying value, also known as the diminishing balance. How to calculate the pro rata depreciation. So on the new fixed asset, it means that you will have to take into account for how long have you had the new fixed asset. Here we work from the date of purchase until the end of the financial year. Also on the disposal, here again, we work from the beginning of the financial year until the day of sale. And that is what pro rata means. It means for that specific period that we have used the fixed asset. You must be able to determine the carrying value or the book value at the date of sale, how it was disposed, whether it was cash, on credit, whether it was a trade-in or taken for personal use, as well as for how much it was sold. You must be able to calculate the profit or the loss on the sale of an asset. So where will you find this? You now have 2 papers in grade 12. So you can either find fixed assets in paper 1, which deals with the financial reporting, but it can also be assessed in paper 2, which deals with the internal control purposes. The type of questions that you can expect, the calculations of the total depreciation, whether we have made a profit or a loss on the sale of an asset, the carrying value of the asset. You must be able to calculate and determine information that must be reported and recorded in an asset disposal account. How to either complete a fixed asset note or find missing information in the fixed asset note, as well as how to answer questions on internal control. So in your first activity, we have an example 1, and I'm sure you have your pages in front of you. So I'm going to go through these step by step. We're going to deal with the asset disposal account. And the first part of the transaction says that on the 1st of May 2019, an old desk, cost price 8,000, was sold for 4,000 cash. So what is important here is that you determine or determine when the asset was sold. So it was sold on the 1st of May. And that is your first part of information that you record, the date of sale. Now, in an asset disposal account, you'll have only one date, and that is your date of sale. Then we need to know what type of asset was disposed of. So it says an old desk, so we have equipment. What was the original cost? The cost was your 8,000, and that is your first step in your asset disposal as well. Let's look at the second part. The accumulated depreciation on this desk on the 1st of March, which is the beginning of the financial year, was 4,400. So what is important here? You first of all indicate your contra account, and that would be your accumulated depreciation on equipment. So if you look at what is given, they give you accumulated depreciation at the beginning of the year. So you start off with that amount. And remember, always show your calculations because you earn part marks for those. But we have disposed the asset on the 1st of May. That means here we now need to record pro rata depreciation. So what is needed? I need to know the type of depreciation method, and it says depreciation on equipment is provided at 25% on the diminishing balance method. Let's calculate that one. So how do I calculate my depreciation? So let us go through the steps again. I have my cost, which is my 8,000. Right? I have my accumulated at the beginning of the year, which is 4,400. I have 25% on the diminishing balance method. So what is important is that you know that diminishing balance means that you must find your carrying value. So we'll take our cost minus accumulated depreciation in order to get our carrying value. So the cost of 8,000 minus that accumulated depreciation that was given there of 4,400. Right? So if you take your calculator, and we're going to do this step by step, you have your 8,000 minus your 4,400 gives us a carrying value of 3,600. So on this 3,600, you now calculate the 25% depreciation. But what is important, we've disposed of it on the 1st of May. So if my financial year started on the 1st of March, I've had it for the full month of March, I've used it for the full month of April, and I'm disposing on the 1st of May. So I'm not going to include May. That means I've used it for 2 months. And for those 2 months, I will calculate my depreciation. So I've got my 3,600 times my 25%, but only for the 2 months. And that gives me my 150 Rand. That 150 Rand is my pro rata depreciation. So let's get back to our information here. So my pro rata depreciation, as you could see, is my 150. It's not always that the pro rata is needed. It depends on when you have disposed of the asset. That brings us to a total of 4,550, which is my total accumulated depreciation. Now, please interrupt at any stage, learners. If you have any questions, remember either in the chat or you can raise your hand and we'll answer those questions immediately. My next step is to determine how I have disposed of this one. Now, in that first part of the transaction, it clearly says that I've sold it for 4,000 cash. And I've mentioned earlier on that if it is cash, we have bank as our contra account. For how much was it sold? It was sold for 4,000. So it's my step one. I've recorded my cost price of the asset that I've disposed of. I've recorded the total accumulated depreciation on that specific asset. I have recorded how I've disposed of it as well as for how much. Next, we close off the account. Now, if you look at your credit side, it shows you that you have a total of 8,550. And that is what we're going to enter. So we close off the account by entering the total on both sides. But that leaves us with a difference on the debit side that we need to find. So we have our cost of 8,000 and our total of 8,550. That difference, which in this case is 550, is my balancing figure. So now we need to determine, is it a profit or is it a loss on the sale of an asset? In this case, it is a profit on the sale of an asset. And I want to show you again how else can we determine whether it is a profit or a loss. Now keep in mind you had your cost of 8,000, but now accumulated your total accumulated depreciation was 4,550. So again, it is your 8,000 minus your total accumulated depreciation gives you 3,450. That is how much it is worth. In other words, that's your carrying value. For how much was it sold? It clearly shows that it was sold for 4,000. So it was sold for 4,000, which is more than what it was worth. And that is how we determine whether it is a profit or a loss on the sale of an asset. Any questions at this stage, please feel free to immediately ask those so that we can move on to the activity. Now, your next one is application time. So if you look at your activity, you have an asset disposal account there as well. And we're going to go through this step by step, but you're going to do most of the work here. So if you look at your information, your activity one, it says Burgers Limited, the financial year ended, and that is what is important, ended on the 31st of March 2019. What is required? You need to prepare the asset disposal. I'm going to change it slightly as in how to go about it. Then the information. Learners, are you all with me still?
The speaker's on.
It says a computer was sold for 1,000 cash to the CEO, Madsen Tom, on the 31st of January 2019. Now here you have an extract from your asset register, your fixed asset register. So we're going to identify the important information. So it tells you the type of asset, it tells you what the original cost was of 21,000. It gives us the date of purchase, which is the 1st of October 2016. It tells us the type of depreciation, in other words, the rate, which is 25%, and it is on cost. You have a table underneath, and this tells you the different depreciation amounts that has been written off. So we have calculated depreciation for 31st of March 2017 that has been completed. They've completed the one for the 31st of March 2018. That was the following financial year. We are now on the 31st of January 2019, where you have to calculate the depreciation. Now, for now, let's first leave the asset disposal account. You have to determine the depreciation for me as on the 31st of January 2019. So please again, look at the information. The method of depreciation, 25% on cost. The cost is 21,000. The date of disposal was the 31st of January. So I'm going to give you a minute to complete that one. And then I want some feedback on that so that we can see if we're on the right path for that one. I see there's a request that we need to put on a light. We're busy seeing to that, Ms. Paulson. Thank you for letting us know.
Let us know if it's getting better or not.
Ms. Paulson, if you could just give us feedback on whether we are on the right track with the lighting here. I'm going to just share so that you can see. Ms. Paulson, any input from you?
Ms. Conradie,
Yes.
it's a little bit better now.
Okay, thank you. Please engage constantly so that we can know what we need to do to make it easier for the learners on that side, please. Are your learners busy with the calculations? Now, please tell me if I'm rushing. I think we could look at those answers. If not, then please indicate.
Ms. Conradie?
Yes, Ms. Paulson?
Apologies, could we have another minute or so, please?
Sure, no problem.
Thank you.
Linus, please, I am going to continuously engage with you. It's important that you look at when you do asset disposal or have to calculate any depreciation, take into account the time frame that you need to calculate it for. So in this case, you have disposed of it on the 31st of January, so that is important. You need to look at the method of depreciation, as I have said earlier on, which is your rate of depreciation, that line there, 25% on the cost. Your cost is given of 21,000. All you need to figure out is for how many months have you still used your fixed asset. That means from the beginning of the financial year up till the day of sale. Mr. Taketa, if there's any input from your side, please feel free to go ahead and share with us. Ms. Paulson? I think we can have a look at our answers for that one.
Yes, Ms. Conradie.
All right, all good. So I'm going to do the calculations underneath. Now, again, I ask you to calculate only the depreciation for me on the 31st of January. So what is important, I'm going to start off with my financial year. Right? So my financial period would have, it ended in March. That means it would have started on the 1st of April. So from the 1st of April up till the date of sale, which is the 31st of January. So let's count how many months I've used it. I've used it for the month of April. I've used it for May. I've used it for June, July, August, September, October, November, December, including January this time because I've had it up till the end of that financial year. Right? So I have used it for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I hope you're all clear on that one. So I've used it for 10 months and therefore I need to calculate my depreciation for the 10 months that I've still used it. It is the cost price method and my cost price is my 21,000. So I'm going to use my 21,000 and I'm going to calculate the percentage rate, which is my 25%. And obviously, it would have been only for my 10 months. So let's calculate that one. And we need to do that again. We have our 21,000. Just move that. We have calculated that at 25%, but we've only calculated that for the 10 months that we've used it. So that brings us to the 4,375. Are we all in agreement? Is that what you got, learners? Are we all clear on how to calculate that first amount for depreciation? I need to have some input just to know that I don't need to repeat anything. So please do share. I have no input at this stage. Let's move on. Next, we're going to calculate the accumulated depreciation. Now, I'm going to take you through the first two lines so that you again can calculate the next one on your own. So my first accumulated depreciation amount of 2625 was the depreciation for that year. Then the following year, I wrote off another 5,250. So that the previous year's accumulated depreciation plus the current year's depreciation gives me my accumulated depreciation at the end of March 2018. I now want you to calculate the accumulated depreciation as on the 31st of January, as well as the carrying value at the end of January for me. And for that, you should use about 1 minute. It's basic calculations. Please follow the information from the first two. It gives you an example of how to get there, so you should be able to do that. There seems to be no chats, no inputs at this stage. I assume that you all are still on par. Now you'll notice that I'm first doing all the calculations, because once you get the calculations right, then entering in your asset disposal account becomes easy, because it's just a matter of finding the contra accounts and you have all the calculations ready. And this is the type of procedures that you deal with in an exam as well. I just need a heads up if the learners are still okay. Mr. Taketa, almost also. Are we doing over the other learners still okay?
Yeah, okay.
Okay, thank you, learners. I can clearly hear you. Let's look then at the next part. Now keep in mind here we had the 4375. So how do I find my accumulated? And I've just shared with you earlier on. We now take the last accumulated depreciation amount of 7,875. We add the 4,375. That was that depreciation that we've calculated there. That gives us accumulated depreciation of 12,250. So I'm going to enter it on my table to make it easy for you. How do I get my carrying value? Now keep in mind your carrying value is your cost minus your last accumulated depreciation. So for this one, if you don't mind, I'll do it here. We have 21,000 cost price minus the total accumulated depreciation that we have written off. So it's my 21,000 minus 12,250, and that gives me 8,750. You now have most of the information that is needed for that asset disposal account. So I'm now going to ask you to please complete the asset disposal account. Please use that example that we've done. We have to record when the asset was disposed of. So again, I'm going to read that information for you. It says a computer was sold, right, on 31st of January. That is important. We know what the cost was. We have that there. We know that it was sold for cash for 1,000. So that's also important information for that asset disposal account. And then you have already calculated your pro-rata depreciation, which is this one. That is that additional depreciation that needs to be added. Remember what I said in the example, when you get your accumulated depreciation, you start off with your accumulated depreciation at the beginning of that specific financial year, and then you add your pro rata. So for this one, I think we can take about 3 minutes just to enter all of those. And then I would like you to tell me whether we've made a profit or a loss on the sale of an asset. And if there's any learner who is stuck, please feel free to ask. The main purpose is that you understand how to deal with asset disposal, how to deal with your pro rata depreciation using your cost price method, how to use your diminishing balance method, because the more you practice, the more familiar you get with how the information is presented, with your calculations as well, and that also saves you time in an exam. Can we have a heads up of where I need to start? I would like the learners to give me input as in, where do I start with my asset disposal account? What do I record? Say again?
Can we repeat that, please? Please.
Must I repeat what it is that I require of you, or what it is that you need to do? As in,
What does require of us, please?
okay, right. So I need you to now complete the asset disposal account, but I want us to work together on this one. So you have your depreciation, you have your accumulated depreciation given here, you have your asset that was disposed for 1,000 cash, you know when it was disposed of, and you also know what your cost is. So we've done the calculations. What is my first entry that I need to put in my asset disposal account? Does anybody have an idea based on the example that we've done?
The opening balance, ma'am.
Not the balance,
The
cost price. The cost
yes.
price of it. That. So when have I disposed of this? That is important. We've disposed of this on the 31st. So that is the date that is important. So I'm going to enter that one. And what do I need? What type of asset am I disposing of? It is a laptop, which means it's part of equipment. What was the cost of that one? It was 21,000. Now, I am struggling hearing the person communicating with me. If you could perhaps come closer to the mic when you ask your question, that would be appreciated. Are we clear on the first step?
Yes, ma'am.
Good. What is my next step? What do I need to do next? Any of the other learners, what do I need to do next? I remember my date is 15th.
Must you remove
Yes.
the accumulated depreciation?
Thank you. So I need accumulated depreciation, and please don't forget it is on equipment, right? Now, when you're not engaging asking questions, please turn off your mic. The disturbance is a bit bad. So I have my accumulated depreciation. What have I said earlier on in my example? What do I start with? Any of the other learners, what do I start with? I start off with that accumulated depreciation at the beginning of the current financial year, which is my 7875. And don't mind my hand, and I think I'm going to show you this on the PowerPoint as well. Then we added, now this is where this one comes in, that pro rata depreciation that we've calculated there. We're going to add that in order to get our total depreciation that we have. So, here's the calculation quickly. we have our 7,875. That is the amount given there, the last amount, plus that pro rata amount that we have calculated here of 4,375. That gives me total accumulated depreciation on this specific computer of 12,250. I trust that you could enter these two transactions on your own, seeing that all the information was provided. What is my next step? What do I do next? Any input? Keep in mind, I have entered the cost. I've entered the total accumulated depreciation. I now need to determine how I have disposed of it, as well as for how much.
I think you must dispose or not dispose, you must enter the bank, the money that you received in your bank.
Right. So she said, thank you. So you said bank, and the reason for bank, I assume, is because you have identified that it was sold for cash, right? And it was sold for 1,000. So that is it. There's your information, and you now need to determine whether you have made a profit or a loss on the sale of an asset. So I'm going to switch back to the PowerPoint so that you can see exactly what you have given me as well. You have, and this is what we've entered already, right? All of that, exactly what we've done when I wrote it down. You gave me your bank and you said it was sold for 1,000 cash. So what do I do next? I now need to determine whether I've made a profit or a loss on the sale of an asset. So I'm going to give you some time to determine that one. Remember, this account closes off. That means both sides must be the same. So look at your debit side total and look at your credit side. And then you tell me what I need to do next. Anyone? I'm sure you can see that the one side is more than the other side, hey? So which total am I going to use in order to get both sides the same? I'm going to use the highest total, which is my 21,000. Are we all in agreement with that one? Right? So we have our 21,000. But now I have accumulated depreciation on my credit side of 12,250, and I have my bank of 1,000. That does not give me 21,000. Do you agree, grade 12s? So what do I have? I have to find the difference between the two sides. Can anyone give me the difference? I didn't get that.
7,740.
Okay. You say 7,750. Well done. Excellent. Right. I need to know whether it is a loss or a profit on the sale of an asset.
Loss. Loss.
Thank you so much. Please don't forget, how to write this. Could you please switch off your mic again? We have a loss on the sale of an asset. Don't just write loss. It is, the wording is loss on sale of asset or profit on sale of asset. It's important that you get used to the proper terminology and the accounts that is used in accounting as well. Right. So that completes our activity 1. Anything that I need to recap before we move on to our next part of the work? Again, I need input from you, grade 12s, and I assume this some of the grade 11 learners because they do exactly the same. Anyone? Right. If there's no further questions, I don't see anything in the chat either, then we are going to move on to our second part for today, and that deals with our fixed asset note, your favorite one, I believe. So we're going to use the same type of calculations when we get there, but let me take you through what a fixed asset note is. So your fixed asset note contains information of all your fixed assets, and that is a note that is applicable to your statement of financial position, also known as your balance sheet. It gives you information, detailed information of the business's fixed assets, and that is why you'll see we have land and buildings, a column for vehicles and equipment. We'll have the cost price, we'll have accumulated depreciation. We then have the movements, which means the changes to it, and we'll deal with that again in order to get to our balances at the end of the financial year. That should correlate with your fixed asset register. Keep in mind, there's a reason why there's a fixed asset register, and you've just seen an extract from a fixed asset register when we did activity 1. So the two must correlate. It must be exactly the same information that you have in there. That total of the carrying value of all your fixed assets is reflected in the balance sheet, right, under your non-current assets. So there we have example 2. So if you could look at your example 2, it says, and calculate the missing figures indicated by 1 to 4 on the note. And that is mostly how they give us information in a paper as well. So part A, information A is your fixed asset note. And as I've explained, it gives you all the information there. Then information B, and mine is on my right-hand side. So we're going to go through all of these, and then we need to see what is applicable for our session. So B says unused premises were disposed of at carrying value. Grade 12, it's important that you read your activities, and then you take a pencil and you underline important information, right? And that way, when you come back to it, you can clearly see what it is that you have calculating and entering information where it is applicable. C says that a new vehicle was purchased on the 1st of November 2019. Now that date is important, so I want you to highlight or underline the 1st of November. D, on the 1st of June 2019, equipment with a cost price of 95,000 was traded in for new equipment, and the trade-in value received was 50,000. That is applicable for your disposal of your fixed asset, or also for your asset disposal account. E, the depreciation policy, which is the next important part, we have it on vehicles at 15% on costs. So how do I find my information? I'm going to again switch so that I can explain step by step. If you look at your information here, right, your example 2, it says that the financial year ended, again, that is important for me, it ended on the 28th of February. We have read through all the additional information. First one says and buildings. Now, by now, you are familiar with the fact that there is no accumulated depreciation for land and buildings. And the reason for that, we said, was that land and buildings does not depreciate. We're going to only record the carrying value or the cost. Again, cost and carrying value would be the same, right? And the same for the end of the year. So if my carrying value at the end is 1,270,000, then my cost would also be 1,270,000. Okay. They want us to find that disposal. And I'm looking at B. An unused premises were disposed at carrying value. How do I calculate that one? I only have a carrying value at the beginning and I have a carrying value at the end. So for that one, we take our 1,006,015. Learners, I want you to work with me on this one as in entering the information, because this is going to assist you with your next activity. And we say minus the 1,270,000. That is how we're going to find our difference for our disposal. So it is your 1,650,000 minus your 270,000. And I get a total of 380,000 for my first one. So we enter that in your final block where it says answer. That is your 380,000. I think I'm missing a zero. Are we all clear on that one? Please, again, if I go too fast, you need to tell me because I don't want to lose anybody in today's session. Let's have a look at number 2. So number 2, they want us to find the cost. Now, again, that's a straightforward one. I know that in order to get carrying value, I would say cost minus accumulated depreciation. Now I need to switch it around. Remember, my cost minus accumulated depreciation gives me my carrying value of 470,000. So in order to find my cost, I now need to add the 2. So I'll have my 470,000 plus my 390,000. And that is how I'm going to find my cost by number 2. So my 470 plus my 390,000 gives me my 860,000. For number 3, if we're all okay with those two, then we're moving on to number 3. Ms. Paulson, Mr. Taketa, are still okay? Are they keeping up with the pace?
Yes, Ms. Conradie, fine on my side.
Thank you. So for number 3, we need to find additions, right? So additions means that we've added to our vehicles. We're looking at the vehicles cost, right? So I'm looking at that one. I know that my cost at the end is 1,110,000. Do I know what my cost was at the beginning? Yes, we've just calculated that. So here, it's a case of finding the difference between the two. So if I have the 1,110,000 at the end, right? I have my cost, which is that information, the 860,000. And that is how I'm going to find my additions at cost. And we're going to double check that as soon as we're done with this calculation. So it's 1,110,000 minus your 860,000. And we get 250,000. So that's my 250 here. So let's quickly work back. Let's see if this works out perfectly. If I had my 860 here as my cost at the beginning, and I've added my 250, my additions at cost, then it gives me my cost at the end. And that is how you can double check your work as well. So those are straightforward ones for the additions. We had our disposal. To find the cost at the beginning, we had to find our additions during the year. Next, we're looking at our depreciation for the current year. Now, 2 parts to this transaction. We have additions, in other words, we have new vehicles. So I'm going to do the new one first. Remember, when we work with new, we need to take into account when have we purchased. So from the date of purchase up till the date, the end of the financial year. So let's first start with that one. A new vehicle was purchased on 1st of November. So from the 1st of November 2018, when does my financial year end? It ends, and I'm going to go there again, it ends on the 28th of Feb 2019. So now you need to determine for how many months have you used your new vehicle. So it's November, December, January, and February. So it's 2, 3, 4 months. You now have to calculate the depreciation for the new one only for the 4 months. Which method of depreciation is being used? It clearly says here on cost, and it gives us the rate of 15%. So what is the cost of my vehicle that I'm looking at. I'm looking at my new one. The cost of that new one we've determined here by number 3 is my 250,000. 50% of that, but only for the 4 months. Let's have a look. So again, it's 250,000 at 15%, but only for 4 months. That gives me my 12,500. That is not all the depreciation. Keep that in mind. It's only on the new one. So I'm going to write that here. It's not my final answer yet. It's only my new one. Next, I'm going to calculate the depreciation on the old vehicles. Again, you look at your fixed asset note because that's where you'll find your information. Because it is a cost price method, I need to take that answer by number 2 because that was my cost. So for number 2, we had a cost of 860,000. Yes, I know my rate of depreciation for vehicles stays the same. It's 15%. That does not change. Right? Do I calculate pro rata here? No, that means it's for the full year. Now, you don't even have to put this part here. Right? I'm just showing you that it's a full year. So you can ignore that part as well. So it's a basic one, and I'm going to do that on the calculator. It is your 860,000, which is your cost. At 15%, that's all that is needed. Right? So that gives me 129,000. So what is the total depreciation on my vehicles that I've written off? I have my 12,500 and I have my 129,000. So those two must be added. So let's add the 12,500 to that. And that gives me my final answer of 141,500. And that's how you complete information on a fixed asset note. If there are any questions at this stage, please feel free to ask. We are not going to deal with D. D you can do as your own consolidation because that deals with your asset disposal. All information is there. So if you want to practice, you can either determine the disposal, which is given there. You can determine the profit or the sale of the asset. You can draw up an asset disposal account using that information provided to you in D. Any questions at this stage? And if not, then we are going to look at our activity. So now for activity 2, I'm going to ask you to calculate A for 1 minute, but let me read through the activity with you so that you understand what is required. So if I look at my activity 2, now you have your example, you've completed the example with me. So you can use that as a guide of how to calculate the information. So for activity 2, it says calculate the missing figures indicated by A to E in the table below. So again, an extract from the fixed asset note, as you can see here. Here's my A, it's a carrying value at the beginning of the year. It is B, it's the depreciation. C, they want us to find the carrying value at the end of the year for vehicles. D, the disposal for my equipment. And then we also have E, which is the total for my carrying value. Right? Depreciation on vehicles is calculated at 20% on the cost price. We've dealt with cost price now in activity 1 as well as my example number 2. So by now you're able to do that easily. Take into account your financial period is given here. So it started on the 1st of March 2018. It ended on the 28th of Feb 2019. That is important information. Then I've already said it is the rate that is important, 20% on the cost. So that you need to take into account. Then we have to look at the following. The company has 2 vehicles as at the end of the current financial year. But one of those vehicles was purchased on the 1st of September. So that would be your new vehicle. And that date is important because you need to calculate your depreciation or your pro rata depreciation on that specific one. An extract from the fixed asset register is given for the equipment sold. The date of purchase was on the 1st of March 2016. This is what is important, the date of sale. So you've sold it on the 31st of December 2018. For how much was it sold? For 81,250. Huh? Your method of depreciation given here, it says 10%. So this is your next one that's important, 10%. Here we're using the diminishing balance method. Now, diminishing means carrying your cost minus your accumulated in order to get to your carrying value. Again, only the first year's depreciation line has been completed. I want you to calculate the depreciation for the second year, and you can clearly see it is a full year that you need to calculate it for. And then you determine the book value. I'm going to do it step by step again. We're going to give you 1 minute to complete that. Look at your information. 10% diminishing balance method, full year's depreciation using your diminishing balance, also known as your carrying value or your book value. So you may start right now, 1 minute for you to complete that one. And again, engage. When you're ready, you give me your answers. If you have questions, please feel free to ask. Ms. Pulsa, I just want you to just make sure that your learners are still on par. So if there's anything that, as I've said before, anything that I need to repeat, let them ask so that we can clear up fixed assets for them. I'm not sure if Layden has joined us. I would like him to engage as well, just to make sure that all our learners are on par with fixed assets. Any input yet? Anyone with an answer? Those fast workers? Ms. Pulsa, are you there? It seems to me that everybody has left my meeting or my session. There's no communication.
I am here, Ms. Conradie.
Okay, all good then.
We have an answer for you.
Are they able to do the calculation? Say again?
For the one learner has completed the asset register.
Awesome, awesome.
Would you
And
like
the
to
others are
answers? His answers?
yes, yes, please. That is the type of information that I want.
Okay, just give me a minute, please.
Yeah.
He's afraid to talk.
Okay, now let the others then provide me with information, but it's important that they interact with the lesson.
Come, Ryan.
Ryan, I can't see you, so you can speak freely. It's fine.
Stand. There you go. Tell us what you have in front of you.
By my depreciation, ma'am, I have on the 29th of February 2018, I have 10,800.
For months.
Okay, now let's just guide the others on how you got to that 10,800.
I think the carrying value goes over as is to the next cost, to the next year.
And then you calculate using that.
Then you calculate the 10% of the depreciation.
Awesome. So again, just for those who are a bit lost, I'm going to take that. And she said, I need to take the book value. In other words, my carrying value. Okay, you just need to switch off quickly, please, your mic.
Yes, miss. Just give me a minute.
Right. So you used your book value because it is the diminishing balance method, as we've said. Right? In other words, you use your book value or your carrying value. So that was my carrying value or my book value given. So that 108,000, we calculate 10% on that one. And because it is still for the full year, as you can see, right, we got 10,800. So thank you for that. It is amazing work that you've done there. How do I now get my book value for the second year? Is there anyone who wants to give us input on this?
Alison, come sit here. Someone can see you. Yes. Oh, yes.
Start with the person for you. Is it Alison that came to speak to us?
Alison is afraid of you.
Yeah. So can I assist?
Must the book
Yes.
value of to the 29th of February 2018 is negated by the cost price less the accumulated, which is I think it's the 120 less the 12. I think yes.
I'm writing down what you're saying, guys.
Oh, sorry, I was listening to that. I will check it. This is good.
And if you look at my screen, is this what you saw? Is this the information that you gave me now? You said 120,000 minus that first amount for depreciation minus the second amount of depreciation. Okay. Or we could have the other way around. We could use the book value of 108,000 minus that last depreciation of 10,800 as well. And you should get to exactly the same amount. Right? So we have the 108,000 minus the 10,800 depreciation that was calculated. That gives me a book value of 97,200 in there. And then you continue with the next one. So by now you have the next one. So quickly recap. And then the next one. Is there some input or question?
Ms. Conradie, apologies.
Yes.
Alison feels very upset now because she's got the answer correct, but she's too nervous to tell you.
Amen. Alison, maybe the next one. Alison, would you like to try again for the next one? Okay, let's move on then. So I now have a book value of 97,000. So now it's the same procedure to find this, but this one, we only need to go up till 31st of December. And that is what is important then. Right? So can you see what I'm doing? I'm first asking you to find these information because this will assist you with the next part of it before we go to the note. So if I look at my next one here, and I'm just going to flip my page, right? So we have 97,200. What percentage depreciation have we said is important there? It says 10% on the diminishing, and that is why I'm using my book value. And don't forget, I'm going to work up till December only. So 10%. But now I also need to determine for how many months. Right? Your financial year started on the 1st of March. You will go only up till the 31st of December. So it's March, April, May, June, July, August, September, October, November, and including December. So again, let's count. It's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Are we all in agreement? We've had it for 10 months. So if I calculate that one, we're taking the accumulated depreciation on that asset. We're calculating 10% of that. That is my rate. But we're only calculating for 10 out of the 12 months. And that gives me my 8,100. That 8,100 we're going to enter in my table. And that means my book value in this case. Now I'm going to do it slightly different to what you might have done that. I have my book value of 97,200 minus my last depreciation amount, 89,100. So this, your calculations for your fixed asset register is done. Let's now have a look at how to find A. So if I look at my information here by A, it's again missing information for land and buildings that I need. Now in the previous example, we had to find the additions, or not the additions, we had to find disposal. We got the carrying value at the beginning as well as at the end. So we found the difference between the two. This time around, you are given the additions of 325,000. You are given the carrying value at the end of the year of 2,550,000. Please calculate A for me. And again, I'm going to give you about a minute because that's a straightforward calculation. As soon as you have an answer, please engage, switch on your mic, put it in the chat, whichever way you're comfortable with. And I don't want to rush you, but you should work according to the time frames, and that is also what happens in the exam. Remember, your papers, got 2 papers, you have 2 hours per paper, obviously written on different days. So practice your time allocation as well, and that you can only master by doing more activities on a regular basis. So consolidation is important. Use past papers. Set a time frame for you. It's normally indicated on your question, as in how many minutes you need to use per question. Right? But it can also be broken down, and I'm sure your teacher can guide you as in how to determine how many minutes you need to spend on a section, even if it's not a complete question for that one. Right? I think we can look at answer A. So what do I have here? I have my carrying value of 2,550,000. What do I need to find? I keep in mind that I had carrying value at the beginning, then I added the 325 in order to get to the 2,550,000. So what do I need to do now? Any input there? Do I add or do I subtract? Remember, I'm working from the bottom up. So there's a rule with calculations in this case.
Subtract.
Subtract, that is perfect. So again, it's my 2,550,000 minus my 325,000 gives me 2,225,000. That's your first one. That's A's information. So land and buildings is normally the easier one, right? Straightforward one. Let's have a look at B. For B, they want us to calculate the depreciation. Now again, we have a new one. That is the one there by additions. Now before I even explain the rest, please calculate the depreciation on the new vehicle. Take into account when that vehicle was purchased. And it says here one of these vehicles was purchased during the year, which is the 1st of September 2018. So you need to determine for how many months you're going to write off that depreciation. Method for your vehicles says here, vehicles is calculated at 20% per annum on the cost. So you have to take your cost, calculate your percentage, but only for a certain amount of months. And that is the important part, that you are able to calculate from the date of purchase up till the date or the end of the financial year. How many months we've had there. So I'll start writing down the information. We're going to calculate the depreciation on our new vehicles. It is on the cost price, and we all know there's my cost price of 422,550. So I can write that down. I think we all agree, we know the method, the percentage is 20, that's my rate. And all I need you to give me is how many months I'm going to calculate this. So it's from September, 1st of September, up until the 28th of Feb. Yes, and use your fingers, that's normally how you calculate your months. Don't forget your timeline is important. So you rule a timeline from the 1st of September, and I'm going to do it up here. So from the 1st of September, I need to go. What's after September? We have October, November, December, Jan, and we have Feb, because my year ends in Feb. So I have 1, 2, 3, 4, 5, 6. Are we all in agreement that I have had that new one only for 6 months? So my calculation, my 422,550, that is my new one at cost always. 20% of that, but only for 6 months. That gives me, and I'm going to write it here, my 42,255. Again, it is not my final amount, because I'm looking at my vehicles and I had other vehicles at the beginning of the year. Now remember earlier when I started, I mentioned that when an asset is fully depreciated, we need to take into account that the asset must be shown at a minimum carrying value of R1. So I now need you to calculate the depreciation on the old vehicle, and it is at cost, so we're going to use that 350,000. I actually need a bigger space because we're going to have some information missing here. So I'm going to just rewrite the new because that's important while you're busy calculating the depreciation on the old one. So what is the cost price of my old one? The cost of my old clearly says 350,000. So I'm going to calculate that for the full financial year, 350,000. Yes, my rate is still the same. It is 20% on the cost price method. You should get 70,000 for this one. Now, let's make an asterisk there and a question mark. Compare that 70,000. So you, according to your calculation, have to write off 70,000 for depreciation. You now need to take into account what the carrying value was at the beginning of the year for that specific vehicle. It is only 35,000. So your vehicles are worth 35,000, but you have to, according to your calculation, write off 70,000. Now that cannot be, because we cannot have a negative amount in our fixed asset register or in the note. We need to have a minimum of R1. So what is the maximum amount for depreciation that can be written off? I'm going to keep both here. Right? So we're going to take my carrying value of 35,000. So we're ignoring this one, 70,000. We cannot use that. As I've explained, it cannot be more than the carrying value of the asset. So we'll take the last carrying value of 35,000. We remove the R1 that must remain in our books. That means the maximum depreciation on this specific asset would be the 34,999. So on my old ones, I'm only allowed to write off 34,999. On my new one, and I'm going to circle the two amounts that I need, my new one would be that 42,255. And then on the old one, it would be the 34,999. Those two would be added. Already have the 42,255. We add the 34,999, and that gives me my final answer of 77,254. And that is B's answer for that one. Any questions at this stage? I know we tend to overlook the part where it says fully depreciated. Yes?
Must have Must can you just explain where the $1 comes from and why we have to do that?
Okay. Now, again, if you look at your carrying value, your vehicle is only worth 35,000. But according to your calculations here, you have to write off a total of 70,000. Now, we cannot write off more than what the vehicle is worth. We cannot have a negative amount in our books or a zero in our books. For that reason, if the vehicle is still in use by the business, then we record it at a maximum or minimum rather of R1 carrying value. So if this is my last value, this is what it's worth, I need to at least keep R1 aside to show it as my carrying value. So how much can I write off? That means the maximum that I can write off would be my carrying value given at the beginning minus the R1 that must remain in my books, gives me how much I'm allowed to write off of 34,999. Are we clear on that one?
Yes, Miss.
And then that's a principle that we apply. Right? And it's important that you look at those when you do your calculations. Sometimes they make it clear and they tell us that the vehicle has reached the end of its useful life. Then you know you need to look at those activities or making sure that you have your R1 as your carry value. But other times not, and you have to make sure that you read through all your information and just quickly compare the current depreciation with your carrying value to determine those. If there's no other questions on that specific one, we can move on to the next part. Let's see if we can have calculate C. Now C is your carrying value. Again, I'm going to ask you to quickly calculate, but it's important that you apply these yourself instead of me just providing you with the answers or the educator providing you with the answers. So I need to find C. You have just calculated B, so you can put in B, and I'm going to put in B in here. That was a total of 77,254. And I'm going to put mine in a bracket because it decreases the value. So at any stage when you are ready, you give me your information there for C. We'll work on this one so that you can have both the information and the calculation there. I trust that you are familiar with finding the carrying value at the end using all the information starting with a carrying value on top. So you have your 35,000, you have an addition, clearly says add, you have your depreciation, which is in a bracket, and in accounting, if anything is in a bracket, it means you must subtract. That is how you're going to find your information for C, your carrying value. I think we can go ahead by showing the answers, unless there's any learner who would like to give her or his answer. Anyone? Let me guide you on this one. So, yes.
Must, I don't have an answer, but I worked out the accumulated depreciation at the end of the year by adding the carrying value and the cost price. Then I got 849,804.
Okay, so which carrying if you look at your information, you have the cost, you have to find the carrying value here. Did you take the accumulated here? Did you enter for yourself accumulated here at the bottom?
Oh no, must I made a mistake because I put the depreciation in that amount.
Okay, that's all good. Thank you for participating. That is what is important. We learn from our mistakes, isn't it? If we give input, we know what it is we need to do next. So I'm going to take you through the steps, if you don't mind. We have carrying value of 35,000 at the beginning. So that is C's information that I need. So what does it say here in front? It says add. So I'm going to add my 400, so it's plus 422,550. What have I said about depreciation? If it's in a bracket, it means it decreases, right? The asset, so it's minus 77,254. And that is how you're going to find your information for C. So let's have a look. Again, we do all our calculations together. It is the 35,000, so it's carrying value at the beginning of the year, plus additions during the year, minus the depreciation of my vehicles for that specific year. And that gives me a final answer of 380,296. Any questions on that one? So the procedure for finding information basically works with what it is that I need to insert, what is given, and what is my normal procedure for finding or getting to the next stage in my fixed asset note. So familiarize yourself with that process as well. I think we can move on to D. D says I need to find the disposal. Now keep in mind disposal would be at carrying value, right, for my equipment. I'm going to say again, the disposal at carrying value for equipment. So you are going to take into account all that information here by your fixed asset register. And you have completed the information already. So you don't need to calculate anything. You just need to tell me which amount are you going to enter by D. I'm going to show you the calculation once again in D, but I want you to look at the completed fixed asset register that we have here. I need to find the disposal at carrying value on the date of sale. The date of sale would be the 31st of December 2018. Do we have some input already? Learners, all you need to do is look at your fixed asset register. Huh?
Mr. Total.
What is this?
Come here. It's the total.
So,
Can you
so your
come?
book value is also known as your carrying value. This is the date of disposal, 31st of December. Now you've done that calculation. Huh? So is this my carrying value on the date of sale? Yes. Now, if you didn't do this, you would have done it in D as well. And I'm going to take you through that again. We had the 108,000 at the beginning book value. Then we wrote off that 10,800 the second financial year, and we wrote off another 8,100, and that was for the 10 months that we've had. So that gives us our 89,100. That was a calculation that we've done first thing when we started with the activity 2. E is straightforward again. Look at the carrying value line. I have carrying value of 2,550,000. What is C's answer? Let's go to C. That is the amount that I need to have. Now it's just adding all the totals together. So I'm taking C's answer of 380,296. 296. I have equipment's carrying value of 50,994. So all of those added together will give me the total depreciation of all my fixed assets. That would be for land and buildings, vehicles, as well as equipment. Total would therefore be, and let's see, 2,550,000 plus your 380,296 plus the 50,994 that we have for our equipment gives us a total of 2,981,290. And then you have completed again missing information on your fixed asset note. Are there any questions at this stage? I'm going to go back because we have that. For those who couldn't make out my handwriting, that is information that we have just completed. All right, so B's information, please have a look at that again and see if there's anything that you wanted me to recap on. That's A and B. We have C and D's answers as well. So it's neatly typed so that you can follow. And then we had E as well. Right? If there's any questions, again, please feel free. We have about 7 minutes before our session ends, and we still have one activity that I would like you to complete. Any questions, any learners, or any educators, any input? Ms. Paulsa, I know you're actively involved here. Are your learners okay? Do I need to go back to any part of a calculation? Let's look at the next activity. Here, I want us to look at activity 3. I'm going to use the page again, it's just easier. It says the financial year ended on the 28th of Feb 2019. Now remember what I said, when you read through, you underline important information, that is the year end, which is the 28th of Feb 2019. Required, calculate amounts 1 and 2 in the fixed asset register. That's our first one that we're going to look at. So let's have a look at my fixed asset register. Information given here. A delivery vehicle was sold on the 31st of October. When was it sold? That date is important. 31st of October is my date of sale. Right? Keep that in mind. And it says no entries were made to record this transaction. Right? What is important here? It was sold for 195,000 cash. The rate is 25%. It is the diminishing balance method. So that is how you're going to find your information as on the 31st of October using all of that. Then the profit or the loss on the sale of asset, once you have determined this carrying value, you compare it with how much you've sold it for. And that is going to tell you whether you've made a profit or a loss as well as the amount. Then finally, fixed assets, the carrying value, you will use B's information. Your fixed assets carrying value is given the total, but don't forget to use information or your answer in number 1 and in number 2 in order to get that, because these decreases the value for your carrying value. So that is an activity that you can do on your own. Ask your teacher to assist with the answers when you're done, but it's important that you work through that. Learners, that is unfortunately our time for now. Thank you for your participation. Thank you for taking time to join, and I hope that you will use as many activities to work through in order to familiarize yourself with this. Remember, you get fixed assets in your income statement, your balance sheet, your cash flow statement as well. So from my side, is again a warm thank you. I appreciate your inputs. Those learners who were shy today, maybe the next time we'll get you to answer. So if there's anyone who would like, you can turn on your mics, you can give me input for the last few minutes or that we have available. We still have about 4 minutes. So any inputs, learners, please do turn on your mic when you want to say. Teachers, engage in order for us to just say our goodbyes. So we're not going to have time to give feedback on this one.
Just sit down, you talk, sit down, you talk. Just talk. Oh, man, what is wrong now? You just talk. Just say anything. Just say anything. We are
Do we?
You must talk. We are you just say anything. You input. You give any input around the presentation.